After a fourth straight month of hotter-than-expected PPI, analysts' expectations for CPI were tightly ranged around 0.3 to 0.4% month-over-month and printed 0.3% month-over-month, slightly below the 0.4% expected. The year-over-year headline CPI fell to 3.4% as expected from 3.5% prior. Under the hood, services slowed modestly month-over-month, increasing 0.25%. Used car and truck prices, along with gas utility prices, plunged on a month-over-month basis. Used cars or trucks fell 1.4% in April and are down 6.9% over the last 12 months. Core CPI rose 0.3% month-over-month as expected, with year-over-year slowing to 3.6%, also as expected. Core goods deflation continues while core services continue to rise. Core CPI year-over-year was 3.6% in April, the lowest it's been in 3 years. The one-month annualized fell to the same 3.6% as the year-over-year, which is why the year-over-year has been more reliable as a trend measure recently. Housing, rent, and OER contributed 17.5 basis points to monthly core CPI inflation in April. While still hot, 2018-19 average was 11 basis points. It's the lowest monthly contribution since DEC 2021, with year-over-year housing in CPI is cooling. Virtually all of the excess core CPI inflation year-over-year, the part of inflation above and beyond Fed target, resulted from housing and auto insurance. Core non-housing services have heated up on a higher frequency basis, but haven't weighing much yet on the annual print. Also, while not in core, but extremely important for anyone who eats food, grocery prices actually fell 0.2% month-over-month in April and are running 1.1% year-over-year. And one step deeper, the so-called supercore, core CPI services ex-shelter index, rose 0.5% month-over-month up to 5.5% year-over-year, the hottest since April 2023. Under the hood of supercore CPI, education costs rose and transportation services dominated on a year-over-year basis. And while shelter costs rose on a month-over-month basis, they continues to slow on a year-over-year basis. Goods prices are deflating at the fastest pace since April 2004, while services prices are stuck around 5.3% year-over-year. Consumer prices have not fallen in a single month since July 2022, which leaves overall prices up over 19.5%. That is an average annual increase of 5.5%. Headline retail sales were unchanged, month-over-month versus 0.4% expected, and last month's 0.7%. Month-over-month move was revised slightly lower to 0.6%. Non-store retailers and motor vehicle and parts dealers saw the biggest month-over-month declines, while spending at gasoline stations rose the most. Both headline and core retail sales slowed on a year-over-year basis. Ex-autos and gas stations actually declined 0.1% month-over-month. Finally, the crucial core control group used in GDP calculation fell by 0.3% month-over-month versus a 0.1% increase month-over-month expected, the third big miss in the last 4 months. If you enjoyed this video, please subscribe for more daily finance and market updates.